Hello everyone, welcome to Gradient Connect. Gradient Connect is a series of interviews conducted with key industry personalities. Joining us this week is Nikita Tissera, Director of Research at Lanka Securities. Nikita, welcome to the show.
Thanks for having me.
The All Share Price Index breached the 10,000 mark for the first time ever. What do you think is driving this growth at the Colombo Stock Exchange?
Multiple factors, Nishani. We've seen the retailers coming in, the foreigners very visibly leaving for multiple reasons. And the first wave of the recovery came in from the export sector, from import substitutions, from manufacturing, even the banks. And this was predominantly fueled by the low interest rate situation that's prevailing in the country. The people who have been, the investors who have been locking their money in fixed deposits at 15% 1.5 years ago were suddenly making 5%. This was the main driver, but this demand has been met by the earnings improvements more than adequately. Because if you see the increase in prices have not necessarily been resulting in increasing multiples in the same proportion. So which means that they've been supported by fundamentals in most cases.
This performance, however, has been centered around selective number of stocks, for example, Browns, Expo, LOLC. However, the broader market that is represented by stocks as the banking sector stocks, Sampath, SMB, Commercial Bank, or even JKH have not been performing much. Why do you think this is?
Yes, we've seen a big difference in the composition of the top 10 market caps. Expo right now is the biggest market cap, followed by LOLC. Whereas John Keel's holdings, which was a clear leader, say a few years ago, what was a proxy to the economy, is now number 4th in the list of market caps. Expo's leadership is understandable. They've grown rapidly, and their growth has been supported by freight rates. So this is very sustainable long-term growth, although it came very rapidly. But I can't say this about some of the other constituents in the, say, top 7 market caps, because I believe what would constitute a better composition is a free float adjusted market capitalization index. Like a couple of these stocks here have free float adjusted market cap of have a free float of, say, less than 1%. So any small change in these prices can make a disproportionately large impact to the overall market cap and therefore the ASI. Yeah, and Commercial Bank, on the other hand, is the number 8th biggest market cap, and this is and you see a lot of trading activity happening, where as opposed to long-term buy and hold has been replaced by a more trading oriented model. And this is something that we see when retailers take the bulk of the activity as opposed to foreign investors or local domestic institutional investors having a majority of a sizable play in the market.
Low interest rates have compelled investments to shift from fixed to equity. Now that the interest rates are slowly rising, do you expect a reversal to take place, and how soon?
It is inevitable, and to fixed deposits too, because the higher the risk, higher the interest rates is, it affects the margin of safety for the investors depending on their risk appetite. But the movement also is a factor of how good the earnings would be in the September quarter, and I believe year on year the earnings would be significantly better given the low base that we've been exposed to, and also the exports, the manufacturing. The entire sectors have gone through significant capacity increases, and the banking sector has gone through significant increases in their NIMs. The private sector credit growth has been good, and we expect much better earnings this quarter. And I expect the improvement in earnings to make a good portion of the funds in the CSC to be sticky.
As you mentioned earlier, year to date there has been a record of $227 million of net foreign outflows. Do you expect these foreigners to come back to the market?
What the foreigners have been more concerned about is the stability of the local currency rather than growth. I don't think growth ever was a concern to them because pandemic was a global hit, and I think our projected growth figures are in par with the global growth projected numbers by I think the IMF has forecasted the global growth to be at 5.5%, and I believe Sri Lanka will grow by about anything between 4.2 to 4.5% in the next 1 year. So in terms of growth, we are not far. Equities in Sri Lanka is an even finer slice where we can capture a bulk of that growth. So if you are looking at the manufacturing companies, if you are looking at the exporters, if you are looking at the import substitutions, if you are looking at the banking sector, we are looking at significant year-on-year growth, and that would be a firm, a decisive factor for the foreigners to come in. So growth is less of a concern to them as opposed to the stability of the domestic currency, which I believe is what could be fixed with more say G2G bilateral transfers that the central bank delegation is working now in the Middle East. We're expecting about $4.6 billion of oil funding, another about $1 billion in revenue. So if we can show the foreigners, at least in the short to medium term, that we can keep the LKR dollar rate stable, then you can see the foreigners coming in, because I think the foreign funds have really been missing the growth spurt that we saw. The benefits were only felt by the locals, and I think we will see some foreign funds inflowing, and that could also change the structure of the top 7, the top 10 of the market caps, because what the foreigners and the more fundamentally sound local institutions invest are not some of the they need, in addition to growth, they need a free float adjusted market cap. So we'll see a change in that sector too.
What sectors do you think will contribute to the sustainability of the stock exchange going forward?
So I'm looking at manufacturing, I'm looking at banks, I'm looking at the exports. I believe the premium that the export exposed companies, the dollar exposed companies went for in the last year could require a shaving, given the fact that the rupee dollar rate would be kept at a stable rate for in the short term. So we might have to revisit the valuations for the exporters and take the valuations down a couple of notches. Other than that, I think the manufacturing sector is doing extremely well. Say the tile sector, which went through a significant capacity increase. Even the garment manufacturers, say guys like TJL and MGT in particular, went through significant, again, capacity increase both locally and abroad. And say countries like Vietnam that went through an extended lockdown, unexpected extended lockdown, we could expect some of that, we could expect some of spillover benefits coming in from what countries like Vietnam missed, and the capacity increase that they've gone through in the last 2 years would enable them to take in this additional volumes.
Anything else you'd like to add?
We've passed the worst, and the equities really didn't care that we were in such a dark place in the macroeconomic space. So, given the fact that we've moved from a very bad place to a less bad place, I think that's where the frontier market investors really capitalize on. I think as long as we are looking for a re-rating that would give us better market access to credit, as long as we are looking at obviously no more lockdowns and no more, say, newer variants of COVID, I think we are on the right path, and we could be looking at a sustained returns to the ASI. Another thing that I wanted to mention is the tax amnesty. Now, the tax amnesty bill was passed in the parliament about a month or so back, and looking at how countries like Pakistan and Indonesia reacted, their capital markets reacted, particularly equities, to their respective tax amnesty bills, I have no reason to believe that we would react any differently, because money coming into equities, fixed income, retail would be the cost of those funds would be just 1%. So I think in the initially when the bill was being passed, Minister Cabral had a target of about $2 billion to it. Now I think now it's being revised down to about 600 million. But still, that's a significant injection to the capital markets. And if what history suggests in the regional counterparts, say Pakistan and Indonesia in 2016 to 2018, if how their markets reacted were any indicator, I think the Sri Lankan bull run should continue.
Much for your time, Nikita. Let's hope the current sentiment will continue with the market, and let's hope for better times for the overall economy. We'll see you again next week with another interesting discussion. Until then, stay safe.